What's going on, guys? Welcome back to the channel. In today's video, I'm going to go over the trades that we took inside the Discord and how, you could navigate it today. So, very simple day. Again, I went over this in yesterday's video. Gave you guys the game plan, exactly what to do. If you followed it, you would have been paid. So, 30-minute time frame. This is what tells us the main trend in the market. On the put side, we're crossed. So, the 10's above the 50, 50's scrolling up. That means the market's bearish because these are puts. And since these are crossed, we're bearish. Very simple. So, we opened up right at 9:30, right on this candle right here. We end up gapping down a little bit, and when we pull up the 0DT chart, this is what we got. So if we go to the 5-minute here, this chart was textbook. So right down in here, if we look, what happened? We got this. This is pretty much a cross trade. I know if you looked at this right off of open, it looks like just a 10 SMA dip right here, but this is more so a 0DT cross. Why? Because 10 went above the 50 all the way back here, and then this 50 started curling up a little bit after open. So once we got that curl up around 9:35 to 9:40, that's when you could have went short right here. And look at that move you got. These contracts, if you got, let's say, a decent, not even a decent fill, bad fill. All right, let's say you got 150, 160. These went all up to 566. Obviously, you're not holding that entire move. You probably would have been selling most of them right here on this massive green candle at like 270 to like 250 a piece down there, and then leave some to run. And then obviously, if you just trailed the 10, on this move up, just trim along the way. Doesn't mean you have to hold until the 10 breaks. That's just kind of like a general rule of thumb of what your stop would be on your runners. So once you're happy with your whatever percent you like I mean, anything. This is what I do on options. Depends on the market, but I mean, if you're up 30-40%, take a trim, like trim half, stop loss even on the rest, and then just trim another 30-40% from there, and then 30-40% on the last third or something like that. Because with the system, there's so many people that just take small gains, and it just doesn't make sense. Because when the system gives you these massive moves, that you should hold longer. I know what to expect with the system because I've been trading it for quite some time. But when we get trend in the market, you could expect bigger moves, and there's no point in selling for less than, really, when we're trending, I wouldn't be selling for less than 40-50% before I take a trim and then move my stop. Because I know what the system's capable of and what it consistently provides, and selling for 10-20% just it doesn't make any sense. Like on NQ, when we're trending, 50 points is a good trim spot for your first take profit. Move your stop loss to break even, and then just trim another 20 to 30 points from there. And then if you could get to 100 points from there, take your last trim or whatever if it gets to that point. So that's kind of how I go about with the take profits. And obviously your stop loss on these trades right here would be the 50. Sometimes it depends where the 10 and the 50 are. So in a neutral market, you're if I'm taking a 0-day cross and we get a pullback to the 10 and the 10's far from the 50, I probably would cut it if it broke the 10 and then just wait for the reclaim at that point. But yeah, on a trade like this, just enter around this, where the 50 curled up and actually got the cross at pretty much, and then you just ride it. Very simple. And then I called this one out back here. So I didn't call this initial one off of open pretty much because it's the first 10-15 minutes. I usually wait for the first 30 to drop anything in the Discord. But we got this nice 50 dip right here. We came down to the 50 at 11:55, went short right at this 50, ended up top ticking this thing for I think it was 70 points we got out of this, 70 to 80 points on this drop into the 10. It doesn't look like a big move, but I mean, if this is 286 to 398. I mean, that's still a very decent move on the premiums right there. That's probably what, 30-40% there, depending on the contracts. These ones were probably more in the money, so if you took out the money ones, these probably would have moved a bit more. But yeah, I ended up getting stopped on the rest of these once it came back down. I got I had really small runners left just because we did hit overbought on this chart, and I can't really give you the exact levels of what overbought was, but this is how you get it, just so you know how to calculate it, because we hit it yesterday, we hit it today. So what you do, this is the only time you go above the 5-minute, you go to the 30-minute time frame and you find where the 50 is, and in this case the 50 SMA is was below 1.00. so when it's below 1, you times it by 4 and times it by 5 of where the 50 SMA is. So let's say, I'm pretty sure when I saw this, 50 SMA was around 0.80, so multiply that by 4, that's 320, multiply it by 5, that's 4.0. So that's your zone, 320 to 4.0, and where is 4.0? All the way up here. So I think we ended up overshooting it today. I'm not exactly sure when in like what the exact levels were, but pretty sure that's where it was around. And sometimes we do overshoot it. And when we were at like 650 a contract, we were extremely overbought. So this drop made sense, and that's how you calculate the levels. If this premium was over $1 a piece, like if this 50 was over $1, like over here, then you would add 4.5 and add 5.5. So that's how you get the levels. Another thing, when you're like getting the levels, when you like see where the 50 is multiplied by 4, multiplied by 5, if we don't reach the overbought zone by the time that 50 SMA value changes, then you update the levels. So you keep changing the levels until price reaches your overbought zone. Once it reaches overbought, you leave the levels how it is and you don't change them. So that's how you go about getting the overbought levels. It may be confusing if you just are doing it for the first time, but that's how you get it. It's pretty much as simple as I could explain it, and that's how you do it. So yeah, if we go back here, 5-minute time frame, we ended up breaking below the 50 right here. And there's no trade on this negative cross. I mean, it didn't end up flipping negative to like right in here because that 50 was trending up this entire way. And another good entry you could have taken short was right here. So if you go to the call side, very nice pop up here in the 50 SMA at 140, and that ended up top ticking it right there. If you entered short here, stop loss above the 50, you got a nice move down on an NQ. It probably dropped like 100 some points from that 50 SMA. So a 50 reject when we are in a trending market is very good trade, because we know the bears have the trend, and if the puts go negative and the calls are getting pushed into this 50 SMA, it just wouldn't make sense for the calls to really cross when the market's trending bearish and the bears have it. So, this 50 SMA is very likely to reject when we are trending. So, it's the opposite of what the trend is. So this 50 SMA right here, very good spot to take a short at, and you got paid on that. So it's very simple trades. You're playing crosses, 50 dips, 10 dips, things like that, 50 rejections. In my opinion, there's no strategy out there that's better than this. It's very simple. Like a lot of people though do not trade it right. Like there's so many people that don't trade it right, and they try and combine other things with this chart, or they add 25 other SMAs to the chart, or they add their own thing to the system, and that's where people go wrong and just do bad with it. Like there's a reason why it works, and why on earth would you change it if it's proven to work? Why would you go add something to it that's not proven to work? Like that's where a lot of people get messed up with the system. They're either trading it wrong, or they're trying to add other things to the system, and it just doesn't go well at that point. I mean, it may work out sometimes, but if you want the most accurate trades and the most success, you have to trade it how it was made. Don't go adding stuff to it. It just doesn't make sense. You're only going to hurt yourself doing that. If you take a loss trading your own way, that's on you. I mean, I know exactly how to trade these charts, and you just got to learn how to do it. So yeah, another thing, if you guys remember Tesla, I went over this yesterday. Told you guys, wouldn't be surprised if this thing got a big move. Why? 30 minutes cross. We were down in this area here yesterday. I bought this little 50 dip. I ended up initially adding up here, bought the 50 dip, average down, and then this rip into close was very nice. We closed obviously right above the 10, so this thing looked really good. Another thing was this 4-hour time frame. Look at this chart, man. Went over this in yesterday's video. That 10 was up super hard, 50 was already curling up. This was an A+ setup, and that is why Tesla dumped so much today. I mean, I didn't hold it all the way. I sold for like 100 some percent off of open. Definitely paper handed it, but I mean, I'll take 100% any day of the week on this type of setup. I mean, it's just an A+ setup. I saw so many people the last week just buying the Tesla dip. When you have these SMAs on your chart, it is very easy to know the direction. I mean, I really don't know how people trade without it, because you know exactly when there could be big moves because of the higher time frames like this. If this 4-hour chart's crossing, man, that's a massive cross, and in turn you get a big move out of it. So yeah, I mean, this chart is just textbook. I mean, it was a beautiful setup. I mean, if you saw this, if you taken it, if you swung it, I mean, you got paid. So yeah, there was a ton of good setups last week. Going into tomorrow, what do we look like here? So 30-minute time frame, still cross, still bearish. So 0DT cross on puts tomorrow, 50 dip on puts. We did hit overbought, like I said, so it is possible that we do bounce and maybe lose the trend from here, because we've been trending a good couple days. Wouldn't be surprised if we did lose the trend. If we continue to hold the trend, break above the 10, and get some more action to the downside, that would be great. Kind of just have to see how price action plays out and see what we could get tomorrow, because usually after we hit overbought, we eventually go and lose the trend. So wouldn't be surprised if that happened. This 4-hour time frame, if it could cross, we're going to see some more downside, but it's still too early to tell. With this chart, there's really nothing right now that is telling us up or down. Daily time frame, we reach pretty much that daily 50 SMA, and that does end the trend quite a bit. So like I said, that plus overbought, wouldn't be surprised if we did bounce tomorrow. So and the chance that the trend does get lost, then look for a cross on calls. I mean, it's very simple. If that 30-minute chart goes negative, good chance that we're going to see a pretty good rip, and look for a cross on calls if that does happen. Like I said, if we remain bearish, focuses on the short, same thing as the last couple days, 0-day cross, 50 dip on the put side, 50 reject on calls, things like that. So yeah, if you guys enjoyed, drop a sub. If you guys want to learn, join the Discord down below. But I'm out. Peace.